Good Sunday morning, peoples. All right, I just did a Roundhill results video yesterday, and somebody asked me in the comments, "Hey, have you compared these funds to Yieldmax?" And I thought I had done a video. I may have, but I remember that um, I wanted to do one. So here's that video. So again, we have 15 funds. Okay, so I'm going to roll through all 15 and share the results. So after I compare, and what's important here, guys, is these are the exact same funds, right? NVIDIA would be the underlying for NVDW and for NVDY. Now, in order to make this work, it doesn't do any good to say, hey, NVIDIA from Yieldmax is monthly and NVDW is weekly because they now have both gone to weekly. Okay. So I used to say, hey, one of the reasons I like, but only one, there are two reasons that I really like Roundhill better than I do Yieldmax. And the biggest reason is, let me say this, whenever I want to purchase an income fund, I always say this to you guys. It's all about being bullish on the underlying. Because guess what? These funds go down 95% the same as the underlying. So yeah, you get a little bit of income, but you lose your shirt. It's no different than investing in a stock. If I go out and I buy Nvidia and I'm bearish, right? Over the next year it goes down 35%. Guess what? I bought it, I'm down 35%. I don't get any dividend, I don't get any income. Well, if I do the same in Nvidia, right? It's going to go down 95% of that, and I'm going to get some income. So I might do a little bit better. I'm going to go down 95% of the 30% decline, but I'm going to get a trickle amount of income. So maybe I lose slightly less than I would have if I just bought the underlying stock. But alas, I never buy an income fund unless I'm bullish on the underlying. So, what do we know about measuring, as a reminder, how do you go about measuring a high yield income fund? Somebody says, oh, what's the yield? Half of the equation. What about does it go up or go down, right? Gain or loss, right? And then I annualize that number, right? So here, this fund has existed for 250 trading days, right? Sorry, 250 calendar days. So that's, 3/4 of a year, right? Because there's 365, maybe 2/3. Okay. So I would be down 6.69% in the NAV portion if I was in NVDW over these 250 days, but I'm down 11.2% by owning NVIDIA. Well, maybe NVIDIA pays a lot more in dividend, and then I'm going to get by. Well, look at this. They don't. They almost pay an equal percentage. Now, based on the price of the fund, this one pays more than 2 to 1. But look at the price, right? When it started, this was almost $50, and this was 21.49. So 16.99. Oh, that's way higher. Well, just barely, right? They both pay around the same. So annualized distribution, look at that, 49.72, 49.57. What do you mean by annualized? Well, it's taking the 250 days and making it 365. Just going over the basics of how I measure all this, guys. So then the second component, so if you just went by yield, these guys are even, 49.72, 49.57, right? 34.06, 33.96. Couldn't get any more even. Now, when I look at the gain or loss, it's a big difference. Why? Second reason I like Roundhill. I used to say I like Roundhill better for the single stocks because they're weekly and Yieldmax isn't. Well, Yieldmax had no choice. I mean, if this current path kept going, then Yieldmax was, I think, 11 to 13 billion, and Roundhill was down at like 4 or 5. But they're trending so much better than Yieldmax, they were going to pass them up. So Yieldmax had no choice but to come out and declare weekly. The second reason I like that weekly, I can react better. If I hadn't noticed that this fund is beginning to lose its NAV grip, and I see the smaller payout, then I can get out on a weekly basis. And in Yieldmax, I sit there and go, oh, well, maybe, Misty's still going to pay $1, so maybe I'll hang around. And I wait another 3.5 weeks and they disappoint me, or like they did with Pulte. They pay $7 and they earn 9, and then they earn 8 again and they pay $2. So totally frustrated with the Palantir Fund, PLTY, within Yieldmax. So I got out and went to PLTW. Best thing I ever did. I don't really want to own anymore any of the Yieldmax fund. So this isn't even biased. I did this impartial, guys. And I got to tell you that the findings just drive home what I've been telling you guys for 6 months and a year, ever since looking at Roundhill. It's just a superior fund. Now, some of you are going to say, "Yeah, but Bruce, when it goes down 120%." Yeah, most of the time that is true. But do you buy a fund that goes down or do you buy a fund that goes up? What is wrong with you guys? The reason that you guys buy funds that go down is because you chase yield, right? You run in and go, oh my God, HOOWHOY, they're paying so much money. But you typically do that, or some people, not all people, guys. Some of you guys are sophisticated investors in these income funds, right? But if you've listened to me and you've listened to somebody that really understands this game, then you've probably gotten a lot better, okay? Because there is an art to it, right? And when you get extreme stretch, just like looking at a chart, whether it's a growth stock or not, I always talk about taking $20 out of Pulte, before there was a PLTW. I mean, it just got up there at like, I bought the thing in the $50, $51 and it ran to 95. I said, this thing is so stretched. I'm going to put a stop in at 91. The next day it went off. And I put an order to buy back in at 70. Hell, the thing went down to like 58 or something. But I got that order, right? I took $20 out of my cost. And then after a while, I said, I'm done with this. PLTW is offering me 120% leverage. And it goes back to I'm in PLTW or I'm in PLTY. I'm interested in it. I do own some PLTR, sorry, the underlying. But I do like income sometimes. It's just I don't do all income. Okay. So I want you guys to be aware of all that. You guys that just chase yield or think something is good. Look, none of that lasts. You can't go out there. That's why the Misty thing is such a, I harp on the fanboys and all that stuff. Everybody's got everybody retiring on Misty and they look at Misty, oh, it pays $1 no matter what the price is used to pay $4, $3. I know I owned it. But I saw it was going to burn out. It wasn't going to last forever. And that's true of any of these income funds. Although I do think Palantir is one of the best companies out there. AMD at times gets it going. I just don't think it's consistent all the time. I'd have to trade in and trade out of it. Maybe I hold it for 4 months or something, you know. because these things will, there are some ways to hedge them and so forth. And I've done videos on that. All right, let's get to this. Let's just get to the coverage. And this is not biased. Okay, these 250-day ones are outstanding. So when you look at NVIDIA, it's not even close, right? What I should do is assume some amount. I used to have $1,000 purchase, but you guys give me some clues about what you would like me to do. You want me to put $5,000 purchased at the beginning and then just show you what the difference is? Because you're looking at it statistically. I want you to see it as if it was your money. So obviously I can't do everybody, but I can plug an amount in here and show you. So bottom line, these things on the NVIDIA funds, right? Basically they paid the same distribution annualized. It's so close. But what happened over here? NVDW only went down 10%, less than 10%. This thing went down, if you follow rounding at 10%, this went down 36%. Okay. So why is that? Well, it's simple. It during this period of time for 250 days, it went up more than it went down. And Roundhill has a distinct advantage on the upside. It has 120% leverage compared to 100%. Now, if it was down all the time, this fund might lose. But that's not the case. You don't buy funds that are going to, and 250 days, 365, those are good periods. By the time you get down to 95, they're still valid. It's just easier to fake out or fool. So look at this. I declare the winner over here every time. Well, guys, I got to go down here to Netflix, right? Which has been a horrible performer. Look at this, down 60% here, down 32 because it's been down way more than it's been up. That didn't used to be the case with Netflix. I comment it on it when I do the Yieldmax stuff. All right, so let's continue across. How about Tesla? Right, closer. Okay, so over this 250-day period, part of that's back when Elon was on Doge and all of that, and they were, burning Teslas and stuff. But Tesla, as of late, if you measured a shorter period, it's done better. So I imagine that TSLW is doing better than this 2-point spread, 2.5 or 2.2. But it doesn't matter. They both actually Yieldmax outpays by 3%. Distribution annualizes 3%. Over here in the actual distribution at 250 days, it's 2%. But bottom line, it is in the advantage on the distribution. But look over here. This is losing 6 percentage points more, but it's still a win for Roundhill. All right, how about Apple? A lot of times, this is one in the past that Yieldmax won, but it lost by a little over a percentage point. And you see it right here. This is so close. Distribution, call it even, is less than a half. Well, it's a half a percent, 28 and a half to 28. And over here is about 2 points that they drop. So they end up with a 1 point plus win. So again, close, but it doesn't matter. Roundhill won, right? So look at coin. It is not close. This is egregious, guys. All 250-day measurements, you have to do it that way. You can't compare a 131 to a 250. So I have to do that. After a year and so forth, and these other ones, I think you're going to see the same results. Okay. So let's look at coin, the coin underlying. We see a 61.65 on the yield, and we see a 57. So 4% different. This is where it's alarming. And why is that? Because in those up spurts, right, you're making a lot more money on the NAV when this thing is moving up. And you're losing more when it's moving down. But guess what? During this 250 days, it's had more upside movement, which is exactly what I want it to do when I want to be in an income fund. All right, guys. I don't know. 35.50 to minus. It's the only one in the 250 days that is minus. Now they're minus. Roundhill lost this one. It went minus on Netflix as the underlying. All right. So let's move to Amazon. Close, guys. 1.2. Why is it that Roundhill's always winning these? Look at this. They paid 70.23% in yield to 42.68. But look here, they nav eroded a lot more. This only went from $49 to $44. This went from 18 to 14. Much bigger percent. Look at this gain loss. 24.40 to 10. You see it again. What is this last 7-day period? It went up 4.7 to 335. Whoops, this one is a green too. So that you see how these things come together, guys. You got to use your common sense here on looking at these. So Amazon is a point winner. Or sorry, I jumped too far down, guys. Big gain. Look at Palantir. This one I own a lot of, right? It's by far my biggest income fund. I've always said to you guys, absolutely love Palantir as a company. Okay. So this thing got crushed. They're up, right? When you get green on both, when you get a 72.65 distribution, okay, annualized, and you have a gain, you're doing something right because the stock is going up more than it's going down, and you got the round hill leverage. You got a big winner. Guys, if you don't do the math on this, this is a 3-to-1. So if you put money in this thing, you're making 3 times the money in PLTW over 250 days that you're making in PLTY. I know. I was there. Okay, Amazon. Now we move into the 131-day category. It takes us all the way to the 10th fund, right? Each of these has five. The orange, there's five underlying funds. The yellow is five underlying funds. So let's go through them before we get down here. So this one is a 2 point, but it's double. You got 2.08% gain and you got 4%, the Berkshire Hathaway. And where do they do it? Well, they paid 10% higher, but they went down 8% on the NAV more. So that's a 2 point win. Look at Hui. Everybody likes Hui. You guys that are in HOOY, you're saying, yeah, baby, I'm up 105%. And you are in Yieldmax, but you could have been up 3 times that almost, 2.5 times that, a little over 2.5 times that if you were in HOOW. Same exact 131 days. Guys, it's not even close on these funds that move. And why wouldn't you be in the funds that are moving? All right, Meta Facebook, 9 point advantage, almost a 10 point advantage. I'd call it a 10 point advantage. And look at this. It's got 12% higher yield and it's got a 2% lower NAV. I mean, a 2% higher NAV loss. So that nets me my 10%. And then Netflix, right? An 8%. I mean, it's a win. There's no question who won this one. But is that what you want for 131 days? You want 4.74? You can get that in a treasury. Yeah, you did worse in Netflix, but I mean, in Netflix W. But why would you be in it right now until that fund changes what it's doing or the underlying changes? Do not own it. All right, so now Yieldmax got one. It's 9-1 in favor of Roundhill. But then we come down and we win the next three. And then guess what? Actually, we run the next four. And then there is no Avgo, right? I mean, even though Yieldmax has a lot more funds, they have not done Broadcom. AVGO is the underlying. Perhaps they will. So I can't compare when it's not there. Now, some of you are going to probably ask me to compare the granites and that, and I'll do some of that. No problem. Just hit me up in the comments what you want to see. It makes sense. But you know what? Granite wins once in a while because they pay a hell of a lot, but they navy road more than just about anybody else. So they can have a winner sometimes, but they got their share of losers. All right, so let me finish going through these. So Microsoft, 4-point advantage, right? On Roundhill. They do it, look at their distribution. They just out distribute these guys massively. 582 to 98. Now it's more than 2 times the price, but obviously that's more than 2 times, That's why they doubled, more than doubled the percent payout on the Microsoft. And then, you know what? They took a 20 points, so they only won by 4 points, 4 percentage points. And they certainly had their share of going down more. All right, how about MicroStrategy, the Misty and the MSTW? Nothing to write home about. Big losers. As I've said to you, don't own any MSTR based until it really picks back up. Just own BTC underlying, not the MicroStrategy right now. So your winner is Roundhill because they lost less. This was, you had a 7-point advantage here, and you lost 3% more. So you end up with a 4-point win. All right, AMD, guys. Now, again, just like this 100% gainer, you guys over there in AMD, why? Oh, yeah, baby, I'm kicking butt. Oh, are you? Yeah, you are 175%, but it's 95 days, guys. But guess what? In those same 95 days, you could have doubled your performance. Call it 1.9. Okay. That's a lot more money. You had, they outpaid, Yieldmax outpaid 6 percentage points. But look at this. Look at your NAV gain. Oh, yeah, because it went up a lot, right? To get this kind of stuff. And look at that advantage, guys. How can anybody not understand that and not take advantage of it? You've got to be a fanboy if you're still over there holding on to the yield less stuff. I just don't understand. And also, while we're on it, guys, come over and take a look at my Patreon. We're killing it in the metals. Yes, yes, I know. For 10 days, we're pulling back. The metals are down overnight. We probably got another few weeks. But guys, I've been talking about this for 6 months. I've got 200% gains, 150% gains. I've got a lot of gains, even with the 15, 20%, 23% pullback in the miners. This is a buying opportunity to load up for what's ahead. This is a super commodity cycle. So when I put this down here, I'm going to put it in here again for you guys. It's on my website It's on my YouTube channel, but I'm going to list it here for you guys anyhow. So everybody can see that. www.patreon.com/TWC100. All right. So come out there, check it out. I mean, you can sign up for free, but you don't really get to see much of the content. But I'm telling you, this is the place to be over the next 4 or 5 years. You want to get in a fund? Get in GDX. I would say GDXY, but again, they got no upside leverage. The only good thing about it is you'll make money in that fund. Okay. But if you really want to make the money, Roundhill is starting this coming week and launching their GDXW. The exact same reason that you want to be in the Roundhill fund when I tell you there's going to be more upside than downside. Okay. So I'll be switching out of my GDXY. Now, again, my income portions are small percentages. When I get 3, 4, 5, 6, 10, 15, 20 times growth in the right stocks and the miners, that's what I talk about in my Patreon. How to get those 5 baggers, 10 baggers, 20 baggers, and just how to do well and where is the market. Don't chase the puck in the corner on the Mag 7 and everything. That's yesterday's news. It's still finishing up, but it's in the twilight period of time, guys. What's going to happen, like it always does in the commodity super cycle, is we finish up strong. All right, last one. Avgo does it's a nice gain for AVGW over the 95 days. We don't have a competitor, right? We don't have something. And then you have GOO, right? Look at this. Another double. It's a perfect double, 188 to 94. You paid a little bit more, 6% more over here, but you just crushed it over here with the gain. Why? Because Google's been moving up. So, guys, 4 more funds were announced. But now I don't know why they didn't do 5. They did 5, then 5, then 5. Now they're doing 4. Well, next week, I know that GLDW, which is physical gold, and Roundhill doesn't, and Yieldmax doesn't have a competitor for that. So that fund will be coming out, but GDXW will have the 120% leverage, and that's on GDX, and that competitor will be a competitor to GDXY. So I'll be buying GDXY, GDXW, but it doesn't look like um, there's competitors yet for these. Although I thought Uber was out there, but I don't think. Let me pull up the Yieldmax ETFs on my other monitor. I like. You know what? Yieldmax has always had the best looking website. I'll give them credit. I love how their website looks. I love what they've done with it. I just wish their funds, you know, worked better. I honestly do, but they don't. Okay. Uber. Yeah, I don't see it. I know it was on the list of ones they'd submitted for, but it's certainly not there yet. Maybe that's coming out if somebody's in the know. And then ARM, right? So I don't see an arm from Yieldmax either. So right now, and then I know they've applied in the past for Costco here, the COSW that Roundhill's coming out with. So it's looking like out of these 4, only one is going to be overlapped. And then on the GDX Y and GDXW, we will have a new one to be looking at. Okay, guys, that's what I got for. Take a look at the Patreon. We're killing it over there. It's the place to be. I've got ideas. I talk about income funds and strategies and ETFs. that pay out. Another great one is SLJY from Amplify. That is a fabulous. It is where it's targeted at 18%. The first dividend distribution was 23%. We'll get another one the middle of this next week, but the upside is left in place. They don't write all the covered calls. And Amplify actually utilizes one of their silver ETF for silver miners, along with some of the big name silver companies on the New York and on the American. So they write calls against those type of things. But again, they don't do it 100% on the thing, so you're able to get growth there. And silver will be an outstanding performer over the next 3, 4, 5 years, guys. I'm expecting probably 5 times its current price. So you can make a lot of money in that kind of an income fund with the NAV side participating and still get 18 to 23% on your money. It's just crazy good. Not without volatility. We're seeing it right now. Silver went to $54 from 30 in a few months. It's probably going back to 42 to 44 to around 48. I think pre-market it's already showing 47. But once this down, retrace rest period is over, it's off to the races. I see 60, 75 next year in 2026. Could get to 100 that soon, but I'm trying to be conservative. All right, guys, that's all I've got for you. Again, it feels good to get back. Let me know what else you want to see on all these income funds. But don't ignore the super commodity cycle, guys, to your detriment. I had guys that come in there in June and July and August and said, Bruce, I wish I would have listened to you and gone in May or June. It was that much more increase. But that's going to be the direction over time, guys. I'm buying like crazy on these pullbacks right now and just adding to my position. This is going to look super cheap in 3 months, 6 months, 12 months. All right, guys, this is Bruce signing out with Targeted Wealth Creation. I'm not a financial advisor, and this is not financial advice. Have a great one. Bye for now.